Hey John, it's David. So what we're going to do here is try and gain an understanding of the question you had about the fib retracements and why is it viable certain times and not viable other times to use longer term pivot lows, pivot highs. And I think there was a little bit of a misunderstanding when I said that when a market has been, or a stock chart, if you will, or price has been to a certain retracement level before, it's not necessarily the same as a fresh pivot low and an unvisited retracement area. Let me explain what I mean in a visual using the chart of Tesla. I just happen to be doing some work on Tesla, and I think I can help at least clear up. If this was the issue, then I think we can clear this up. If it's something else, then we'll figure out what that thing is and clear that up as well. So here we're looking at a long-term chart of Tesla. I've picked out a pivot low down here at 141.05, and I've picked out a pivot high, which is the all-time high that happens to be 389.61. Okay, so forget about where price is just for a second. Let's use this example, and let's just say that price is right here. So we're already through January 31, 2018. This is a monthly chart, so we're through the month of January, but we have not traded much in February and March or April or May yet, okay? So there's nothing going on past January. The question is, if in fact price was currently, let's just say as of the close of today, and let's say today we're still over here in January, let's say price was at, the closing price was 354.31. So let's say price was around 354, okay? But it had already visited down to these lower levels, 294.66, that retracement. It already visited that level after it made the all-time high. So we made the high. The next 2 months, the market sells off, or Tesla sells off. It visited the 2.5 retrace. It visited the 38.2% retrace, and then it bounced up again. Now, let's say we wake up tomorrow morning and there's bad news on Tesla. The stock is gapping lower, and it's going to be gapping lower already to either the 327 area or even below that. It doesn't matter. Why? Because in this example, let's say it was gapping to it was going to gap open at 331, let's say. So would 327 be a viable area where we would be expecting a price reaction in the other direction, where we would be expecting a bounce higher? And the answer is it may work, but it's not the same probabilities if it was visiting that price level for the first time. Since it made the pivot high, considering the pivot low we're using, it already visited the 327 level. It already visited the 294 and everything in between. So are those retracement levels, do they have the same validity had the price not visited those retracement levels ever before using current pivot high and pivot low? And the answer is no. And the answer is they're not the same. They don't have the same viability if price hasn't yet visited them. Let me take it down to a daily chart for a second, and I'm going to see if I can explain this farther. So it just so happens that Tesla is going to gap lower tomorrow. Tesla closed today at 301.15, and Tesla is going to open, well, it closed the aftermarket session at 287. Who knows where it opens tomorrow? So the point is that when I take a look at this, I'm going to go to a weekly chart, and let's just say none of this was here. Let's just say that on a weekly chart, just from the bird's eye view, we can't really see what pivots to use. Let's say we were going to use that pivot from before. Okay, same one. I'm going to draw it in. It'll be rough. It won't be spot on the price. Doesn't matter for this. Okay, so let's say we're going to use that pivot. And I'm going to go back to the daily chart, and I'm going to say, whoops, one more time. I'm going to go back to the daily chart, and I'm going to say, all right, this stock's going to open at 287.95. My next retracement levels down here at the 50% retracement around 265. Is that viable? Is the stock going to get to 265 tomorrow? Well, I'll take another assessment in the morning, but just from a bird's eye perspective, probably not. Anything could happen. It certainly could. The market sells hard and Tesla's selling hard. Sure, it can get to 265. Why not? But is there another option? So another option might be, and you do the assessment in the morning again, but what another option is, let me take the most recent pivot low to the most recent pivot high and just see where the numbers work out. Let's just say that that's spot on the number. So let's go back to the daily chart and let's just say that this recent pivot low, this recent pivot high, the stock's going to retrace and it's going to open up somewhere in between the 25% and 382% retracement level. Is it going to trade to 383? Well, there's more of a likelihood of it trading to 383 than there is 265. Remember 265 from before. So these are some of the processes that I go through when I'm analyzing a chart in the morning. I like to go to the long-term chart. I want to see where the fibs fall on the short-term chart. I want to find a happy medium. If I draw the fibs using various pivot lows or various pivot highs, and I keep coming out with the same price, for example, 260, making up a number, keeps coming no matter where I change the pivot low to, 260 comes up, whether it's a 382 or a 50% or a 618, just keeps coming up over and over again. Well, that should be an indicator to you that that price level is important and therefore most likely will produce a price reaction in the other direction if that price was reached during the trading day. So those are just some of the things, some of the thought processes that I go through when figuring out what pivot high, what pivot low to use, where has price been before, can I take them on a long-term chart, can I take it on a short-term chart, do things change, I want various looks. It is an art form, it's not necessarily a science. You and I are not going to necessarily come up with the same analysis on the same stock every single day, but that doesn't make one of us right or one of us wrong. It's just one way to look at it. One day I might be right, and the following day you might be right, and that's just the way the market works. So hopefully this is helpful. If I haven't answered your question, let me know, and I will give it another shot and try and do so. Thanks.